Hello everyone, good evening and welcome to what is effectively our last live weekly trade plan session. We've explained the last few, and I think it's probably prudent to start with this actually. We've mentioned over the last few weeks that we're going to switch this particular webinar to an on-demand session. And what that means is we will be recording it as always over the weekend. And we'll post it for you a lot earlier on a Sunday, probably around by Sunday lunchtime, I'd imagine at the latest. And what that means is you could then access the live recording, at your own leisure, effectively. So we've taken on board some of your comments and things like that. So hopefully you will find it a more of a beneficial exercise. So you'd be able to access this recording still every single week, and it will be recorded live. But it'll be placed into your members area, and you'll just simply go to your members area and be able to click on the link and review the recording in your own time. And obviously you've got our contact details, so if you do have any questions about anything that's covered, feel free to contact us as normal. Okay, so if we have anyone new to us with this particular webinar again this evening, let me explain what it's about. We take a look, it's effectively about multi-time frame analysis. Obviously the markets are closed over the weekends. So it's important for us to take stock of what is actually happening to price action. What it does is it can enable us to have a handle on market conditions and be able to plan for the week ahead. So what we do is we take a technical look at weekly and monthly timeframes. We look to identify the important highs and lows and genuine levels of support and resistance that we can use in the trading week ahead. So if we identify a weekly high or a weekly low and price action breaks those levels, it adds additional confirmation to perhaps the trade idea. So that's the thinking behind it. So as always, we'll be observing our main 15 global markets, plus any other markets you would like us to look at towards the end of this webinar as normal. Okay, so just before we begin, if we could start with our risk warning as we always do. So please do take a quick moment to familiarize yourselves with the risks involved in trading the financial markets. Obviously trading is inherently risky, and I'm sure you're hopefully at ease now with our approach, which is very much geared around risk management and your ability to protect your capital above all else, and then look for opportunities and let markets run if you get those opportunities and when they come. So that's the risk warning. Hopefully you've had a chance to read that. So what is the importance of a multi-time frame analysis? We've identified a few reasons. Firstly, you can see more clearly what is happening and who is genuinely in control of each market. I mean, that serves a real function because one of the fundamental pillars of our trading approach is to have a directional bias. So that means we need to be sure in our own minds that we're either looking to buy a market and sell a market. And if you can clearly see who's in control and you look to go and trade the markets in that direction, you definitely look to stack the odds in your favor. So the larger also the time frame, the more important the genuine level of support and resistance becomes. So that's important to take on board as well. If we're talking about daily, because we trade daily timeframes, so we look at daily levels during the live trade room during the week. But if we can add that to a weekly or a monthly level, then it adds more significance. Also, it can show you the important levels where a market is likely to move towards as well. So we might have some major weekly and monthly levels ahead, and the market might be sort of moving towards that, and it can really assist us with taking profit. And then finally, also, it can assist with the identification of trend reversals. So as we and often what we mean by that is we often look at smaller time frames to see if there is a sea change, and so that can work as well. Looking back at time frames to see, right, well, are we seeing a series of structural failures on lower time frames? If so, and we have a structural failure on a daily and maybe even a weekly, then it can really assist you with being able to identify that trend reversal. So it is quite an important tool to be used, and we only largely look at this principle once a week to just give us a bit of a better understanding in terms of what the markets are doing. So that's a brief intro. So let's get straight into the charts. And I'm sure you're all very, very familiar now with the routine, and you're probably quite familiar as well with just the nature of the markets over the last number of weeks. And we're just seeing a number of markets which are failing to clarify any significant trend to any great extent. And one of the major reasons for that is often when you get a really large explosive move to the downside. So, these prices, December 2016 was up at 103, and now we're down at 90. So there's a good sort of 12% devaluation in this market. And that's quite significant, especially when we're talking about the US dollar. And it often takes a little while to start unfolding. Good evening, guys. Good to have you on board as always. I hope you're all keeping well. So as always, it can often take a little while to unwind these significant moves. And we're talking about, a really nice devaluation down to these levels. So we can see that this move has occurred literally over a 12-month period. And we're going through this. Unfortunately, we had the signal, which was confirmed structural failure to the upside here, which obviously subsequently failed. It doesn't mean that this price isn't going to continue to push higher. We just had an initial false start, effectively. So let me take that off then. So that's why we have to be very patient with these trend reversals. So as you can see, we're contained within the weekly and monthly levels. So if we look at this chart on a weekly level, you can see how the high, previous levels of support become resistance, and that's why we really love working with support and resistance, because it's easy to see and identify and understand. And even on a monthly level, it coincides with this month's high and also last month's low and the month before that, as you can see. So from this, you'd be a lot more bearish if it closed a little bit lower, but we are only 11 days in to the month, so there's plenty of opportunity for even this to reverse and start squeezing higher. But if we go back to the weekly chart, which is a little bit easier to see, we're getting a bounce off this level. We've kind of got a very loose double bottom here in this market, and there's every opportunity for this market to start squeezing higher. So last week was overall positive, but a relatively indecisive. It's more of a bullish spinning top. So a little bit of indecision still. So the market clearly needs to work itself out and to see exactly what's happening. So for the purpose of this particular webinar, we're still going to work with the 90.86 to the upside and the 88.13 to the downside. So that's the dollar index. And I think you're going to find this across the board, where we're just operating within a structural range, obviously the same as the dollar index. So that's what we're seeing here. And this is an inverted look of the US dollar. So again, this is looking like it's looking to unwind, but we're going to, just allow and give this time a little bit more room to see if we can get that squeeze lower. Now, we are currently selling at this level. So far, so good. This is the price action we would like to see. So we've seen that first. We need to break the weekly low next week, and then we need to start pushing down to the 21.54. And actually, a break of that would be a significant, we're likely to see a significant move lower at that point. So we're still going to work to the upside with the 125.54 and also to the downside, the 121.54 as well. Okay, so the pound dollar now. So this market is working nicely for different reasons. We've got this kind of downward sloping resistance line. So every time price bounces off this level, we get this little squeeze lower. And we're likely to see a bit of a continuation in that. So let's see if this market has enough to break these levels, and we've kind of got a double bottom in this market as well. So we're getting this narrowing of price action in here. So that's quite important. We'll be quite interested to see what happens. Do we get that break higher and reverse a lot of these downward moves, or do we actually break these lows and start squeezing this market even further? So it feels like there's a little bit of strength coming back into the dollar. How long that will last for, we really don't know. That's more of a sentiment view on this market. So with regards to the weekly time frame, again, we're still going to work with the weekly highs and the weekly lows. So the 143.43 to the upside, and a consistent break beneath the 37.10 would constitute potentially a nice opportunity to take this lower. So if you're buying this market, you're kind of looking at this weekly time frame and looking and suggesting that it's not looking overly great to the upside. So you'd probably want to be marginally, mind you, and this is why multi-time frame is quite important. You can see the kind of the pattern that exists. Down, up, down, up, down, up. Okay, there's 2 months back to back, but then you get this alternating pattern, down, up, down, up, down, up, down. So we're getting this continuation. So what that says to us is we need to be quite patient with this market. As you can see, this is like a monthly sort of pullback off these lows. Has huge potential to push higher. You know, these are monthly time frames now. So to say that we've got erratic price action is an understatement. You could argue that all we're seeing on a monthly time frame is just a consistent pullback. So will we get a break and we get another push down to these lows? Very possible. Just looking at this bit of price action here. Okay, so we're going to work with the 143.43 to the upside and the 137.10 to the downside. Fantastic. Okay, so moving swiftly on. Again, we're within this sort of range-bound price action. And the reason why that's quite useful is it gives us heads up as traders in terms of identifying exactly what the market conditions are. And when you look at price action like this, we're in consolidation. Okay, so we've got the weekly levels to the upside and monthly levels to the upside and also to the downside as well. So it's just a case of a bit of patience needs to be applied before this market really determines exactly what it would like to do. So again, on the weekly levels, we're looking at the 107.89 to the upside and the 105.24 to the downside. So we've been working with these levels now for a few weeks. And that just allows us to just back off the markets, not be so aggressive. We need to really identify these market conditions. And this is one way of being able to do that. The dollar CAD, all we're seeing is a pullback off the highs. Now, a reasonable pullback. Now, there's plenty of scope for it to pull back even more. We'd like it to pull back to maybe 126, 127 area if this could conform to that. So another 100 pips lower, and we might get a nice little turnaround trade. But that trade might exist anyway, especially if we zoom out. So again, we've had this false break of that level. So yes, we've broken above it, but we've had that reversal. So often this clears out some of the initial buyers. But if we can get in at this market at a much lower price, then that would do us very, very nicely. Okay, so we'll monitor that closely. So let's look at it on a weekly time frame. So what we'll do is we've got every opportunity for this market to continue lower off those highs, and look at this bit of price action around the 129.14, which is a weekly level. You know, and this is another good reason why, if we look at these weekly levels, we can really see what's going on here. We've had a clearly defined rejection of this level on a weekly basis. So we've got that rejection. So now, if anyone is looking to buy this market and they're seeing this price action in here, you know, my question would be to you: how confident would you be of this market moving higher? In fact, let me roll that out to you guys. Like, give a score out of 10 in terms of how confident you'd be at this with this price action of this market moving higher. You know, perhaps an 8 or 9 or a 10 if you think it's really, really positive, and maybe a 2 or a 3 or a 4 if you think it's got serious problems to the upside. So, you know, I'll just give you a few more seconds. Your answers are coming through now, thick and fast, which is great. So yeah, I mean, we would concur with that. The vast majority of you put your 2s and 3s, a couple of 4s in there, but you know, you're generally on the right end. No one has any real confidence of pushing this higher just yet. Now, on a weekly time frame, if we got this kind of price action and then a nice little doji, you know, we could then argue, right, well, what we like to do is to buy this market at a much lower price. So that's the general plan. So yeah, so Connor, you just mentioned if you look left, there's been some serious resistance. Yeah, absolutely, absolutely, and this all reinforces that idea. So yeah, completely agree. So we're likely to see a bit of a pullback. Now we do have a couple of options if this market pulls back to a nice level that we're comfortable with. You know, we could trade it up to these levels again, and then if we get that approach where we get to break higher, then we can probably trade it at that point. So just a little bit of patience is required at this point, but you know, good observation skills, that's what it's all about. So what we'll do is we'll change these weekly highs and lows. So the high, it's very interesting as well. This is the 130 level. This market has bounced off, so that's a major psychological level in this market. So the 1.3000 or 29.99. So let's change that level to the upside. So 129.99. So that's to the upside, and we will work just for consistency purposes with the low as well. So we're likely to see a little bit of selling off come into this market. It doesn't necessarily mean that we have to sell it just because it breaks beneath the weekly low. But if that opportunity exists, then we might certainly look at it. The 28.09 to the downside. So 28.09 to the downside. So there we go. Okay, so that is the dollar CAD. So moving on to the New Zealand dollar. So we're getting a little bit of a bullish kind of bounce, really. So we've had a double bounce off this level in here, and we've had a kind of a structural failure moving to the upside as well. So you'd actually, from a price action perspective, you'd probably want to be looking to buy this market again now, certainly above these highs. Might constitute an interesting trade. However, we kind of want to see how things pan out regarding the US dollar. So we'll see. So just a little bit of patience is required in this market. Let's look at the weekly time frame. So we're very likely to see this market push higher off the back of last week's price actions. So that just allows you to just, you know, not be so confident that the market's moving lower. We looked for an opportunity to sell this the week before last, which we were in that for a while, but we identified the potential for resistance around this area, and unfortunately, that's exactly what we saw. So so you'd have to think a break above the weekly highs might constitute an opportunity to buy this market. So what I'll do is, so I'll just, in fact, let's clear these lows completely. So I'll take a note of this low. So the low is the 71.75, and I'll just change this just to be accurate. 71.75 to the downside, and we'll take the high level of 73.09. So 73.09. 23.09, fantastic. And let's change it into our nice green level, just indicating it's a weekly high. Okay, so that is the information there for the New Zealand. Just finishing with the Euro Yen. So again, we're kind of within this trend. This sideways moving market. So you can see all the resistance over to the left-hand side here, and we're getting a little bit of resistance as a result. Market selling off a bit, but Friday's price action now just leaves it in a little bit in two minds. So on a weekly, you just got a nice little pullback. So you constitute a break above this might mean that we get that little bit more strength coming back into the euro, especially against the yen. So let's see if we get this flight of capital into the yen once more. Okay, so with that in mind, let's look at these levels, see if they're correct. I'm just going to move the low ever so briefly. So the low of this market is 129.33. 129.33. So just a little bit more accurate. So break beneath 129.33 to the downside might constitute an interesting sell, and a break above 132.16 could constitute an interesting opportunity to buy, depending on what's happening on the daily time frame. Okay, the euro pound. So we're getting a pullback to, we were never really overly comfortable with this sort of break. It was very much on the back of kind of news, and it was very much a news-based trade or a sentiment-based trade. And you can clearly see it sort of rejecting. And now we're getting this kind of reversal price action here. So taking a step back for this market, this is very likely to continue for a considerable amount of time, where we're going to get this erratic price action. So it's really a market that we're just sort of monitoring on a weekly basis. So we're going to work with these levels to the upside, the 90.30 and the 86.86 to the downside. So those are the levels there for the remaining Forex market. So if anyone was in any doubt about the US indices in terms of, are the wheels coming off? I suppose the answer to that is categorically no. We're already seeing fresh highs in the NASDAQ. So that sell-off really didn't last very long at all. So a break beneath the weekly, you can see we're still trading underneath that level. So that would constitute a very interesting structural failure. So we've literally had one technical structural failure, although it was messy and it pulled back quite considerably. But a break above the 2789.50 level could constitute an opportunity to take this long if price breaks above that. To the downside, we could operate with slightly higher lows, I guess. So let's look at it on a weekly time frame. So I think we can do that. I think we can work with this low in here, which is the 26.47. 26.47. 26.47. Brilliant. And to the upside, we're still going to work with the 27.89. So that is the S&P. It's the same situation, but there's a bit of a lag. So in the S&P, the price action is just up a bit higher around the 25.809 level, this structure here. So we're lagging just a little bit in the Dow Jones. So even a break above this daily high could constitute maybe tomorrow and Tuesday a little bit of an acceleration in this market. So that could be one to look out for on an intraday basis. Okay, so so a nice bullish candlestick on Friday there, and that's kind of responsible for a lot of this price action. So we're still going to work with these highs, the 25.809 to the upside and the 24.204 to the downside. So as you can see, we've got 5 weeks of sideways moving price action after 2 weeks. So we only had a 2-week sell-off, and that is supposed to be the so-called correction that we've experienced. So onwards and upwards, by the looks of it. Okay, the FTSE, again, we are kind of lagging as well behind the S&P. So again, we're likely to see a bit of continuation. You can see Friday's price action wasn't as aggressive as it was in the Dow Jones, for example, but we might get a little squeeze up a little bit higher over the shorter term, certainly more on an intraday basis. But for the purpose of levels, what we're going to do is we're going to have a look at the weekly levels here. So we are experiencing sort of this range-bound price action over a 5-week period. So those levels exist, are going to stay in place, 73.31 to the upside and a 70.24 to the downside. Okay, so moving on to the market, which is now at an all-time high again. So unbelievable price action after a major devaluation. But as you can see, it didn't really last too long before we're now at all-time highs again. So that's just interesting in its own right. And you can see how much more advanced this market actually is. And what that can often do is it can identify those markets that are lagging. It can maybe give you a bit of insight into where price action is going. across different markets. Yes, there is these markets are made up very, very differently. Yes, they can act independently, but you can certainly take some catch-up trades. As long as you really control your exposure to risk and don't tolerate any sort of significant loss. You can certainly there are opportunities that are worth considering. Okay, so this is at an all-time high. So let's have a look at it on the weekly time frame. So now we shall just go back to normal, as things were, which is working with the highs and the lows of the previous week. So the high of this market is 71.03. I think 71.03. That's the high, and the low is the 67.42. So I'll just bring this up. 67.42. So those are the levels there in the Nasdaq. So that completes the global indices. Looking at the gold market, we are seeing again, we're kind of in this sort of range bound. It's kind of a mirror image of the dollar market to many extents, where we did see this sort of structural failure, which comprehensively failed, and we saw a really clean pullback. And now we're attacking the lows again, but Friday's price action just puts that little doubt if you're looking to buy these markets. So the 1302 is a really significant level to, if you're looking to trade this market to the downside. It's certainly our opinion in the short term, to allow this market to just unwind, and unless we get a clearly defined opportunity, we're just going to leave it do its thing and see what levels it tells us to work with. So we're looking at the 1365 to the upside and the 1302 to the downside. Okay, so moving on, last couple of markets then, we've got the crude oil. So again, we're within this range. Obviously, we've got this sort of bullish tone behind this market, which we've been looking for opportunities to buy it, and that is still the case. So Friday's action was quite significant. We've kind of created a bit of a double bottom there. So if we break these kinds of highs, that's quite a bullish bit of price action there, and we'd be looking to push up to the $66, $67 level, certainly attacking these recent highs. But we could easily get this push over, and unless we get a break of these levels in here, it could constitute a bit of a failure trade, where we could just get a little rollover back to this descending line, which is where we prefer to trade it from, if we could get a better entry on it. So we just bide our time with that particular market, even though we've got a bullish bias in this market for sure. Okay, so the 10-year note, we're on this major downtrend. We're looking for opportunities to sell it. As you can see, we've been frustrated for 5 weeks, nearly 4 weeks, let's say, 4 full weeks of very poor price action, but you still wouldn't be that interested in looking to buy this market. So as long as the prevailing winds are squeezing lower, which they are, we're quite happy to sort of sit around in this market. Normally we would get quite sort of impatient with allowing a trade like this to grow, but these are one of these trades where the fundamentals row in behind it. So we shall look for this opportunity for this market to start squeezing lower. And if it does, this is definitely one we want to stay into the downside. Okay, and just finally, the Eurobond. We wanted to sell at these higher levels here, the $159 level or euro level, and we were unfortunate. We experienced a major gap to the downside, so we actually got into this trade much lower, which was just a bit of a shame more than anything. And this was the expiry, the future contracts, and this market gap down as a result of that. So we actually got into this market much lower than the 159 euro level that we wanted to get in at. And what we saw then was a little bit of bearish price action followed by quite a bit of bullish, and so price is meandering around this level. So we'd still be looking for opportunities to sell it. we mitigated the risk of this trade, and looking at it on a weekly, you can see the explosive move. It's just a shame because we did cherry pick this market to sell it, and we had a pending order sitting in the market. We just needed it to open at these levels, and we would have experienced a nice explosive move lower. And it would have been a really nice risk reward trade down to these levels down here. You can see it would have been about a 4% gain just on that trade. So look, that's a shame, but that's also the nature of the markets as well. We wanted to make sure we didn't expose any upside potential. So I think we took a £15 loser in the end on this market, but that doesn't distract us from wanting to look for opportunities to keep selling. So with that in mind, it's a very ugly on a weekly time frame. So what I would like to do is just change these levels so we're consistent with them. The high to 160.36, which is exactly that level, and the low is the 156.21. So 156.21. Great. So those are the weekly levels. In the Eurobond, I'm still looking for this market to squeeze lower, and if it does, you can see what we're unraveling from, which is a major bull market, a few years of consolidation, and we're getting this explosive move down. And unfortunately, the price action was perfect around the $160 level when we wanted to sell it, and now we're already trading around the 156. So plenty of scope for this market to squeeze lower, especially with the increasing yield situation as well in some of these markets. So this could be like a year-long kind of approach. We just got to carefully, time our entries as best we possibly can. Okay, so that just about concludes tonight's price action. So as we can see, last 4 or 5 weeks, we've been working with consolidated markets. The market conditions are that most of the markets are struggling to clarify which direction they're looking to move in. So they are moving sideways. So if you do trade those markets, trade with that in the front of your mind. As a result, getting in and out becomes a little bit more difficult. You are exposing more risk, in market conditions like that. So this is one of these opportunities where you practice patience and just literally wait for these markets to work themselves out. So on that note, guys, I'm quite happy to take any questions. If you would like to follow us on Facebook, Twitter, and LinkedIn, the details are there up on the screen. And as usual, this will be, and to just remind you guys as well that this is actually the last live presented weekly trade plan webinar at 8 p.m. UK time. So from now on, like I explained at the beginning of this webinar, and I appreciate there was a few of you sort of running late as well this evening, which is absolutely fine. But to just remind you guys that we are moving to an on-demand version of this webinar. So we're still recording it live every weekend, so you'll have all the up-to-date prices. However, we'll post it into your members area approximately lunchtime every Sunday, and what that means is you can access it in your own time. And of course, you'll always have our email address there, support@TheLiveTradeRoom.com, and feel free as always to ask any questions at any point along the way. So Connor, you're just mentioning US daylight savings. Interesting, because I know it's coming up. It's normally at the end of March, isn't it? Unless I'm mistaken. Let me have a quick look into this for you. So like some of those daylight saving hours kick in earlier, like for example in the US. So it does impact the times at which a lot of the US news events occur. And I'm just looking at this off screen, and Forex Factory is always good for this information, and I'll get that date for you if you just bear with me. Yes, daylight saving. So Sunday the 25th of March. So let me slide this across now just so that you can see it. So we've got daylight saving time shift affecting the Swiss franc, the euro, and the British pound. So Sunday, the 25th of March. So we're a couple of weeks away yet. And normally the US switches to daylight saving. I think it's the week before, but this doesn't actually specify. So on this occasion, it might be the week after. So let me have a quick look. So those are the daylight saving hours. So we'll keep you updated as well in the live trade rooms, of course. Yes, so there's additional daylight saving time shifts affecting the New Zealand dollar and the Aussie dollar. Can't for the life of me see the daylight saving hours affecting the US, but we will keep an eye on it and we will monitor everyone accordingly. And the only real impact is it just obviously shifts the usual times at which a lot of the US news is actually released. So you're absolutely right. It is something to be aware of. And we might send out sort of a circular to you guys as well, just to let you know. Yeah, I mean, it won't impact necessarily the times in which we deliver this webinar. So that will always stay consistent. But you're absolutely right. Those of you that are perhaps joining us from maybe North America, for example, or Australia or New Zealand for that matter, then of course, yes, it will impact your attendance time accordingly. So we'll try and keep you updated on that as we go. So I'm just looking through the comments. Thank you very much for joining us. So this is the last live 8 p.m. UK time recording, or should I say live webinar. So we're going to switch to an on-demand version. So we'll record it over the weekend and we'll post it for you. So you'll just have a little bit more flexibility in terms of when you can join this particular webinar. So on that note, guys, doesn't seem to be any other comments or questions coming in. So that's great news. So look, again, thanks very much for joining us. Yeah, Connor, you can still, and those of you that are perhaps, thinking, like, will we still be able to get feedback? We can still monitor that for sure. So don't hesitate to drop us an email. If you do have any particular questions, we'll be happy to take that up for you. It largely became not a significant issue, but the vast majority of people actually watch this as an on-demand recording anyway. So it was often a difficult time for a variety of different reasons, and we decided to shift it. It's a bit onerous on us as well, especially on a Sunday evening. So for that reason, kind of works well for us to pre-record it and post it. But it's still live for all intents and purposes, and you can agree or disagree with our analysis accordingly. And you'll have our email address. So any questions, drop it through, and we'll get back to you, as soon as we possibly can. But we'll certainly be keeping an eye out for any questions coming in over the weekend as well. So hopefully it'll work just as well for you. Great stuff. So on that note, guys, thank you very much as always for joining us. Do enjoy whatever is left of your weekend. And we're hopeful we shall see you all join us in the live trade room tomorrow evening. So on that note, thanks very much. Do take care. We'll speak to you soon. Bye for now.